welcome to another episode of the Academy FX course. And in this course, we're just going to be going with the trend line and channels. Right, so let's get into it. Right, right. So we're going to be talking about trend lines and channels today. And it's basically just showing us how to understand trends, right? How to know what trend or what market is doing at that particular point in time, how to know what trend you are looking at when you're staring at the market. That's basically what we're going to go into today. So I think in the previous class, we did we did a very small briefing on what the trend line the channel should look like. And I think it was something like this, like because the market always but when the market moves, it always moves in like certain patterns and lines, right? So this is a trend line, all right? So according to the market or according to the trend line theory, is that this pivoting point, right? This point where market is changing direction, right? Like anytime it comes back, you touch it, right? To reverse again. Anytime it comes back, you touch it to reverse again, right? So according to the market, it's the trend line theory is the market comes back down again. So like any of these points, probably, yeah, like whatever, as long as it's within this level, right? It's going to buy again. This is the theory of the market. And then a lot of traders leverage on that and then put their buy orders around here, their stop loss around here, and then their take profit around the previous high, and then wait to cash out basically. Right, so this is the basic concepts of what the trend line is. And then they've probably done the same thing here too. Yeah, so probably do the same thing here too. Probably do the same thing here too. It's basically just printing money based off of a pattern that you feel market is going to repeat. All right. It's just basically trading off a pattern that you feel market is going to repeat. You feel like, okay, after I broke this, it mitigated from here, went up, from here, went up. The third time, you feel like, okay, two touches, I want to buy, right? But your trend line is always valid after three touches, right? Your trend line is valid after three touches. And some people say two, some people say three, but I come to the realization that I should just set it at three, right? Because it's more convenient that way. But after three touches, that's after one touch, two touch, three touch, then you'd want to start buying, you'd want to start buying. Right. So like that's the whole concept of what the trend line looks like. And there are a lot of other ways, right? You could depict a trend line, but like this is just one of them. And then I'll be showing you guys some, I'll be showing you guys some. Right. So that's basically trend line, right? And then trend line are also seen as liquidity, but when you go to that like in another topic, in a much more advanced topic. For now, just know that that's what your trend line is. And then when you see a trend line like this, right? Obviously, this is what type of trend is this? Exactly. This is your uptrend, right? This is your uptrend. Because then what makes it your uptrend, right? It's your uptrend when market breaks multiple structure to the upside, right? So once you're seeing higher highs, right, upside, or once you're seeing once you're seeing higher highs and higher lows. Right, so I would explain higher highs and higher lows to you very soon. I'll explain all of that very soon. But basically, uptrend is when market breaks multiple structure to the upside, or sorry, I made a mistake. Or once you are seeing higher highs and higher lows. Right. So I'm going to quickly explain what I mean by higher highs and higher lows to you now. Right. So when you see the market move from one point to another, right? Let's take this for example. Right. So now this is a low, right? This is a high. Do you understand? This high, right, formed this low. Now this low is higher than this one. Listen, this low right here, this particular point right here, is higher than this particular because you can see the difference in the distance, right? So this low is higher than this one. So that's why this low you can conveniently correlate your higher low, right? Is your higher low because then it's it's higher than this one, right? And then the sorry, this your low is higher than this, so we can call it your higher low, right? Now this was my high. This is my higher low because it's higher than this one. Now, what will I call this? Because this high is higher than this one. Do you understand? This high, like this is the highest point the market got to at this particular point in time, is higher than the previous heights the market got to in that particular point in time. So what would I call this one? This one is now called my higher high, right? This my higher high, why? Because it's higher than this high, right? Now, this is my new higher low. Why? Because this low is higher than this one. Do you guys understand? Right? I want you to calm down and understand properly. This was my low. This was my higher low. This was my low, sorry. This was my high. This was my high. It was my high because then this is the low, this is the high. Now I have an higher low, a low that is higher than the previous one. Now I have an higher high, and high that is higher than the previous one. Do you understand? Now coming back down, I have another higher low, right? Because then this low is higher than the previous one. What would I call this exactly? My higher high. Why? Because then it's higher than this previous one. What would I call this to? Exactly my higher low, right? And then what would I call this? Exactly higher high. So basically, once you start seeing the formation of higher lows and higher highs, once you are seeing higher lows and higher highs, what's that? Your uptrend. That's just it. Because the market is going up. Once you start seeing the formations of your higher highs and higher lows, higher highs, higher lows, higher high, higher low, higher high, definitely if market keep going up to form an higher low and a higher high back again. And what do we call that? Your uptrend. I hope you guys don't get it twisted, right? And it's the same thing if you are going to the downside, right? It's basically the same thing if we're going to the downside, right? But it's just it has a different name, right? But it's basically the same thing. Basically the same thing. So seeing market from a downtrend, right? What makes it a downtrend? It's when we have multiple break of structure to the downside, right? When we have multiple break of structure to the downside, or once you are doing lower highs and lower lows. Right. So, or once you are seeing lower highs or lower lows, right? This is when we have a downtrend. Let me write this down. Right. Downtrend is when you have multiple bigger structures to the downside, or once you are seeing lower highs and lower lows. Right. That's like the basic concept of it. The same way with the uptrend is the same way with the downtrend. Right. And then how do I mean by that? This high, right, is where market was. This low is where market was. Now, this high again is lower than this high. This one is lower. This one is lower than this one. So we're calling this our lower high. Why? Because then this high is lower than this one, right? And then this low is lower than this one. You know, this is our high, low, our lower high, right? This low is lower than this low, right? So this one is called our lower low, right? This low is called our lower low. This is our lower high, right? So if as market formed this one again, what are we going to call this? Our lower high. Why? Because then this high is lower than this one. This high right here, this point right here, this one right here is lower than this point right here. Because an high was lower than this one right here, right? And then if this is our lower high, this is what exactly our lower low. If this is our lower low, this is what our lower high. I hope you guys are understanding. It's not too much, right? It's we're still going to come back to that over our chart, but the basic frame I want you guys to understand is this, right? Just look at it, study it very well, and then try and grasp it like properly. Try and grasp it properly, right? This high is lower than this one. That's why it's our lower high, right? And then this will called our lower low. Right. So our downtrend, right? Our downtrend is when you have multiple break of structure to the downside. This is what I call a break of structure, right? So you have this swing point, breaking this particular place. It's like our analogy with the ball, where we say once the ball breaks the roof, right? So this or once the ball breaks the floor. So this right here is breaking this floor. So it's called a break of structure, right? So once you have market do anything like this, it's called a break of structure, right? So once market breaks any certain level, we're still going to treat that on our more advanced classes, but I just want you guys to know once market does like breaks any pivoting point in the market, it's called a break of structure, right? This right here too, it's called a break of structure, right? The same thing applies to this particular point. Yeah, right? Even on an uptrend, the same thing happens because this created this pivoting point, this created this pivoting point, boom. Anything that happens, right, that causes market to break a certain resistance level or a certain support level is called our BOS, our break of structure. Right. So I hope you guys are like understanding the whole concepts of what we are calling our lower lows and lower highs. Right? I hope you guys like grasping the whole concept of it. You are understanding it. All right, let's move on. Let's move on. Right. So our trend lines, we're going back to our trend lines now. So our trend lines for the uptrend, right? And our trend line for the downtrend. right? And our trend line for the downtrend too, right? So what will you call this, right? What will you call this level right here? Exactly. This is what our is it lower high or lower low or higher low or higher high? Exactly. Our higher low. Right. This is our higher low right here. Right. What would you call this point? What would you call this point? Downtrend. What would you call this point? Exactly. This is our lower high. Right? I just want you guys to understand it. Right. So what will you call this point right here? This level. Correct. This is our lower low. Right? Because then this low is lower than this one. It's our lower low. Right? Once you can see a low, right, you can see a break of structure, you can see another low that formed another high, and you get, and it's only valid, right? So this lower low is only valid, right? Once once there is a break of structure, right? Market forms that low and the market pivots from that particular level, right? So once market does, hold on. So once market does something like this, and then boom, right? Sorry, let me give you another example. I'm trying to make it clear. Right, so once market is doing something like this, and then, right? So what are you going to call this level? What are you going to call this level? Is it your lower high or your lower low? Or your higher low, or your higher high? What are you going to call this level? Now, this is a more advanced or more tricky question, but let me explain to you guys like bit by bit. All right, so this was our low, this was our high, this was lower high, this was our higher low, sorry, higher low, this was our higher high, right? And then this was meant to be our higher low because it's higher than this low. But the only time, again, listen, the only time you can validate either an higher low or a lower high or a lower low or a higher high. The only time you can validate it is after you've had a break. Because assuming market broke this, then definitely this is our higher low. But market did not break it. So this is not our higher low. Again, this is our low, our high, our higher low. Right, it's our higher low. Why? Because market has broken it, so it validates this level. Market has already broken structure, so it validates this level to call this our lower high, or our higher low, sorry, our higher low, right? Our higher high. The reason why this is our higher low is because it has already broken structure. So it's already validates this. And then this is our higher high because the highest point market got to before it pivots. It's changed direction to the downside, right? And then this would have been our higher low, assuming market broke structure. But market did not break structure, so this is now a higher low, right? Now, this is our what? This is our lower high. The reason why this is our lower high is because market broke structure to the downside. Assuming market did not break structure to, sorry. Assuming market did not break structure to the downside, I wouldn't be calling this our lower high until there's a break of structure to the downside. That's when this is our lower high. The same thing at this point, assuming market did not break structure to the upside, I won't be calling this our higher low until that break of structure occurred. So the only time you can validate a higher low, right, or a higher low, sorry, right? Or a lower high. The only time you can validate it is after a break of structure. But you see your lower low, obviously it's just a it just happens after the break of structure has formed, the market has changed direction to the other side. If the market keeps going down, right, this to whatever infinity gets to, that's where we now call our lower low. Do you understand? I hope you guys are understanding. So let's leave this for a second. Let's go back to this. So this is what we call one. That level right there is what we call our higher low. Why? Because then this is higher than this. This low is higher than this low. This low is higher than this low. This is why we call it that one, our higher low. What we call this level right here, our higher high. Right. The reason why this is our higher high is because this high is higher than this high. This high is higher than this high. The reason why we'll call this high our higher high is because this high is higher than this one, right? And that's just it, right? So if we're meant to label everything, this is what our higher high, right? This will be our higher high, right? This will be our higher high, right? And then this will be our higher low. This should be our higher low, right? And then this should be our higher high once market has formed a low already. Then you can now identify this as your higher high. Right. So the same thing goes to this point right here. This should be our lower high. Right. So I don't expect you to just get this like from the first time, right? So I would need you guys to like go to your charts and practice. You can practice on your mobile phone, right? You could practice on MT4, MT5, right? Just keep practicing. Try and spot out your lower highs, your lower lows, your higher highs, your higher lows. Try and spot it and figure it out, right? Okay, for this right here, for this right here, we have our lower high right here, right? We have our higher high right here, right? We also have our lower high again, higher high again, right? This right here, we can't call it our lower high because then it did not form an higher high, right? But we have our higher low right here, right? We have our lower low right here. The reason why this is a higher low is because it broke structure and now this is lower low. Painful. I hope this is clear, right? We have our lower low, and then we have our higher low. Right. So you can see that there's a possibility for market to switch from an uptrend to a downtrend quick. Right. So you can see that like there's a possibility where markets will switch from an uptrend, right, to a downtrend fast. Right, fast. And what this gives us, or the advantage this gives us, is that once we are able to spot a particular trend, right, on our higher time frame, we can in return go to our lower time frame and look for trades, right? So, for example, this is our daily time frame, and then you are getting these moves on our daily time frame, right? Once I see market get to these points on the daily after the run to the high side, I see market gets to this point on the daily time frame. I'm already looking for buys, right? I'm already looking for buys. And once I can spot a particular buy, right? I'm already trying to buy on my lower time frame, right? Up to this point, this level here. Why is because I don't know what point market will form its higher high, but I do know market is going to take out this higher high. So I'm going to leave my take profit here. Do you understand? So once I see market is on an uptrend on the higher time frame, I go to my lower time frame and I start looking for buys, right? Same things with the downtrend. Once I see market is on a downtrend, right? Or like when I see market is on the down, once I see there's a big of structure to the downside, immediately I go to my lower time frame and I look for where I will be selling, right? And I'll definitely just sell to where market is. I wouldn't want to sell for a very long period of time, right? So market can switch from an uptrend to a downtrend really fast, right? So the way you can make money by becoming a skilled trader is being able to identify trends when you see them, right? Because now this is your lower, your higher low, higher high, boom, right? Now don't do a mistake to name this your higher low until market breaks structure, right? So now market failed to break the structure and created a breakthrough to the downside this time of that support level that took price back up. Now, after that break of structure that you've just seen, right? This is automatically your lower high and this is automatically your lower low. A reversal, boom, a break again. This is automatically your lower high. This is your lower low. This is your lower high. This is your lower low. I hope this is making sense, right? So let's go to the charts and then let me try and see if I can use the chart to make any more sense to you guys. Right. Sorry about that. I'm really tired. All right. Okay, so let's start from here. Right, let's start from here. So we're going to be marking from um, right, so going to be marking this. Right, so let's look at the price from this line to this line. All right, let's see what has been happening. So you can see before the hold on, you can see before the formation of that line that we get, market was doing what? Market was forming lows, highs, lows, high, low, high, low, right? So you can see that market was on a semi downtrend or was in the downtrend, basically, right? Because then it kept on breaking structure, right? It kept on breaking structure, kept on breaking structure, right? Kept on breaking structure, right? So once you start seeing that break of structure, and once you start seeing that break of structure, right? Assuming market broke this structure again, right? As the market broke the structure again, then obviously we'll call this our um lower high, and then whatever point it gets to, we'll call this our lower low, right? Because then it's our lower and lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, there about lower low, right? Then it's just that convenient, right, for market to do something like that. So let's move on. You can see as market formed this, right, it did not form any lower high that will return from a lower low again afterwards, right? So after forming that, market started buying, right? So I would not confirm the uptrend until I've had a very valid break of structure, which I got a valid break of structure here, right? And at least 2 to 3 valid break of structure. So I got one valid break of structure right here, right? I got another valid break of structure right here, right? And I got another valid break of structure right here, right? And most conveniently, or most of the times, people would like to see this. That's the highest per market got to before commutation. People would like to see this being taken out. Once this can be taken out, then boom, there's a shift in direction of the market. That's why you have something like this. you have something like this, you have something like this, you have something like this. All right, so you can see where this is coming from, right? You can see that this is, all right, so you can see that this is definitely coming from a downtrend, creating a series of lower lows and higher lows, right? Same thing here, lower lows, higher lows, lower lows, higher lows. And then boom, there was a break of structure to the downside, right? That was this point. This point was broken. That was here, boom, right? And then the break of structure to the upside, that's the swing level point, which is here, right? Very to the downside, boom, because it's to the upside, boom. Right now, we've confirmed an uptrend and we want to keep buying. Do you understand me? Right. So if we want to keep buying from this particular level, right? Want to keep buying from this particular level because we've already gotten our break of structure. We've confirmed that this is an uptrend. Right. All we need to do is just to wait for market to break structure and retreat back into a zone the market is familiar with. For example, up, right? Came back down to this level, but came back down to this level, right? So assuming you entered your buy position here, boom, you'd have made profit, right? And what's funny is that a lot of our beginner students actually grasp this concept very fast, and then they easily start making money. I can remember there was a guy, CJ, right? I think around like this year, last year, there, but he immediately started trading live prop account of like 10K, right? Within like the 1 month, 2 months, it's crazy the amount of growth that you can make trading in the market, right? So recently, I've even dived into this derived, right, the volatility market, right, and it's been very good, right? But let's not deviate. Let me just continue. I'll show you guys later on, probably at the ending of this class, and then we can move on. Right, so now you can see your uptrend lasted from here to this point, right? When did the uptrend end? The uptrend ended when market created this low, right? So market created this low, created this high, and then this low was taken out. Right, so sorry about that. This low, this high. Right, so you could see that once there's a break on structure towards the opposite direction, right? Like once market is going up, right? And then we have a sudden shift, break of structure, right? Market will start coming down. Well, that coupled with other different things, but that's like just your basic mindset towards it, right? Because you could see that there was a break of structure of this level. That's this support was broken, right? Or this trend line uptrend movement was taken out, right? And then after it was taken out, what happened? Market created this high, right? Came back down like it was creating a low, right? So obviously these are being oh my higher low that's creating a higher high. False, right? It's not a higher low because then it never created an higher high. Do you understand? Now that it's not your higher low because it never created an higher high, what happened was that market eventually got to this level, breaking this lower high, this higher low that created this higher high, this higher low that created this higher high, all right? Market broke it, created an high, broke it again, broke structure second time, created an high, right? And then it kept selling, right? But basically, what I want us to do right now is I want us to be able to, I want us to be able to label the highs and the lows, right? I want us to be able to label them. So let's start. Let's start. Right. So we have these points right here, right? This point right here. This is what we call our one, our low, right? This point right here is what we call our high, right? Just take all this away, don't get distracted, don't get confused, right? So you're coming into the market, trying to figure out where market is going to. This is our low, this is our high, right? And then what else? This is our low again. What else? This is probably around this level because this is what makes a significant low, right? So probably this is our high, right? This is our low, right? Are you guys catching up? Right, so this is our high again. This is our low, right? This is our high again. This is our low. Then this is our high again. Right. So you could see that market did not just move randomly, right? It moved from our highs to our lows, our highs to our lows, our highs to our lows, and so on, right? And then it kept moving from highs to lows to highs to lows till it broke structure. And now you could see it's moving towards the downside, right? So you could see the movement towards the downside. Although it wasn't that clean, but anytime you see like a major break, you understand that, oh, okay, yeah, market just did something significant, right? And then it's trying to move to the next high and then from the next low. Right. But then at this point right here, market changed direction. Why? Because then it's formed this high from this low. That's this higher lower high from this lower low. Right. So this lower high from this lower low, and then market eventually broke this lower high. So at least from here, we know that market has shifting direction because market broke this lower high, right? From a lower low and broke it again. So I think when you get a double break of structure, you know that yes, the change in direction is valid for now. Right. And then since then we've been going up, forming lower highs, lower lows, and all that. Right. So I hope this whole lows and high thing, right, is clear to you guys. I hope you guys can grasp this properly. And again, you need to go to your charts, learn, practice, practice, practice. That's the only way you can become better, right? Just keep practicing, keep learning. But that's the basic frame of what it should look like, right? And then your channel, right? Your channel is just basically like a pattern because we've done uptrend, we've done downtrend. I've showed you how to identify an uptrend, how to identify a downtrend. So, right, using your break of structure or using your higher highs and higher lows or lower highs and lower lows. Right, so channels are basically just trend lines, like two parallel lines in a particular trend, right? So it's just basically me being able to draw this line, right? It's just me being able to draw this line and me being able to draw this line in order to predict the highest point market will get to and the lowest point market will get to, right? So this is what you call your channel, right? Because market is trading in between two consecutive levels. Do you understand? Right. So there are different type of channels that your ascending channel, your descending channel, where eventually forms your wedge pattern, right? And things like that. You know, the market it's very intertwined, right? Eventually you're going to learn all of this like very soon. But let me give you guys some examples so we don't just leave without an example, right? Right. So I told you guys that there are three types of movement in the market. There's the upwards movement, right? There's the upward movement, there's the downward movement, right? And then there's the sideways movement where market doesn't really do anything, it's just, things something like this. The sideways movement, it's not really going up, it's not really going down, it's just within itself. Right. It's also known as consolidation, right? It's also known as consolidation or ranging markets. Right. So I think something like this should be consolidation. Like it's not really though, because then it has direction to some certain extent, right? It has direction to say on your lower time frame. But to me, I wouldn't want to trade anything within here because it's not creating any significant highs, right? Because after after this level was formed, this level was formed, this one. And then after it broke this level right here, hold on. After this level right here was broken, right, to form this high, market broke it, did not really do anything, came back down, went back. Do you get it? It was just consolidating to me, though. It was just consolidating, right? So I wanted to show you guys an example of a channel, right? And I will show you right now. Okay, so see this. This is what type of trend is this? Your uptrend, exactly. Right. So if this is your uptrend, we want to get an uptrend or upward movement channel, right? So I can use it by drawing through certain pivoting points in the market, right? So like market touched it here, touched it, right? So first touch, second touch, and all that. Yeah. So it touched the first touch, second touch, third touch, fourth, and so on and so forth, right? And then this right here. Right, so you could see that market was literally traveling within this level before it eventually broke out. Right, so this is your channel. Right, this is your channel. So anybody that bought from probably here would know that okay, by this point in time, so have been gone. Right, anybody that bought from here should know that okay, by this point in time, so have been gone. Right, anybody that bought from here would also want to leave as an extension, but market will structure themselves, which is fine. Like you've already hit like 3 TPs. One loss is not going to kill you. Right. So let's look at other examples. Right, you can see this. Right, you can see this on your lower time frame. This is a valid sell um downtrend movement, right? Where it's just coming down, creating a series of lower lows and all that. Right. So you see a channel. So market definitely moves in channels, right? Definitely moves in channels. You just have to have the eye to spot it out. You just have to have the eye to spot it out. All right, because you see something like this. All right, so you can see first touch, second touch, right? Market came back, touched it again, and kept on buying. Do you understand? So like our trend line traders, this is what they do. They just draw lines and then pick out wherever they want to buy and sell from, and then they execute that trades. That's basically how they trade. And you don't need you don't force the trend line, right? If it comes, it comes. If it doesn't, it doesn't. Right. So you can see that there are like certain pivoting points in the market or market will definitely change direction. And if I extend this line, right, if I extend this line, right, I could be saying that, oh, okay, yeah, market, but from here, market is going to come meet it here, stuff like that. And trade off of that and then try and target this highs, right, which is still off far, but I would be saying, okay, eventually market is going to get to my point before it comes back down again, before it comes back up. Things like that. Right, so that's what your channel is, that's what your trend line is. We're done for the class for today. Right, we're done for the class for today. And a lot of students usually use this like just print up money for themselves, basically. So once you start going through each topic, right, you start understanding the market more clearly. You start seeing like some certain things that you were not seeing before, so more clearly, and then you start improving also. And that's just it, right? That's basically just it. And we always tell our students that, oh, we would guide you to our possible best, but we also need you to trade because we do send our signals to students, we do send trades out to students inside classes and all of that, but we need you to be able to do it by yourself also, right? Because in case you don't have any access to anyone at that particular point in time, you need to know how to trade also. So that's why we teach you everything you need to know on how to trade, right? We teach you everything you need to know. All you need to do is just to keep pushing, keep learning, keep practicing, and you're going to get there very, very soon. All right. See you guys next class.